You are all welcome to another weekly forex forecast on Chart Empire Trading Academy. This weekly forex market analysis is for the 23rd to 27th of February, year 2026. This week, we will check out gold, GBP paired against USD, Euro paired against USD, Euro paired against the Great Britain pound sterling, GBP paired against the Australian dollar and the US oil. Before we get it started, kindly share, like, put a comment down, and let me know your opinions based on this analysis in the comment section. For training, tutorial, mentorship, please refer to the description of this video or call us on +234 9060201255. You could also chat us on WhatsApp or Telegram. For free trading signals, check the links in the description of this video. Now, the first currency pair we analyze is the Great Britain pound sterling paired against USD. Last week, I announced my buy entry on these currency pairs. So currently right now, price is still finding demand at the level of the 1.34480, which we made a buy entry on Friday through the morning candlestick, which formed at this demand zone. So there's a strong order block right here, you can see, and there's a sweep right here. So there's a break of structure. One of the reasons whereby we took a buy on this trade right there when price retraced right there. So next week we are still anticipating more buys to flow to the upside, and our TP1 acts at the price of the 1.36990. Our next TP acts at the price of the 1.38000, right? And before we proceed further, if you are interested in the Yoruba version of this weekly forex market analysis, please check the links I left in the description of this video. I have the link pointing to the Yoruba version of this weekly forex market analysis. So next week, if the bulls fail to defend the key level structure of the 1.34300, then we should expect price to depreciate to the next potential demand level, which acts at the price of the 1.33600. So this is what we have on the British pound sterling paired against USD, right? It's either price move this way or price bounces all the way down to this level to find demand before it goes up, right? So this is what I am technically seeing maybe it would happen next week. Now, the next currency pairs on our list is the Euro paired against USD. Based on the technicality we explained earlier on Great Britain pound sterling paired against USD, there is a similarity on Euro paired against USD as well. We can see the bullish rally on Euro paired against USD. We broke a structure right here. That was on the 23rd of January 2026. We retested this structure again. After we traded this structure, we had a short-term buy swing right here. Price moved down again to sweep this low. So we had multiple sweeps of these lows. That was on Friday and Thursday. That was last week. But price couldn't depreciate all the way down. Now, before we move to the 4-hour chart, there are a lot of demand right here, which could act as a point of interest. That is, if the buyers fail to defend the key level structure at the 1.17500. So this could make price to depreciate to the next demand structure, which acts at the price of the 1.16900. So now on the 4-hour chart, we can see on the 4-hour chart, we have series of demand right here based on the order block we had right here. So price is still defending this zone, buyers are still defending this zone, this zone right here. So failure for buyers to defend this zone next week, this could make price to depreciate to the next level of the 1.16800. And if we cannot see demand right here, this could make price to depreciate all the way down. But based on what I'm seeing right here, there's an alternative for price to use this zone right here, maybe as an inducement before it moves from this level all the way up. So this is one of the reasons whereby I prefer Great Britain pound sterling USD to Euro USD for a buy, right? So I still like the technicalities we had on GBP paired against the USD against prefer it to the Euro paired against USD. Now, the next currency pair on our list is the Euro paired against the Great Britain pound sterling. Yes. Now, based on what we had right here, you can see we have a series of rejections at the level of the 0.87450. So this is a strong resistance level which had been active right from 31st of December 2025. In fact, this was the last high in the year of 2025. Price depreciated all the way down, and currently right now we are testing the same key level resistance. You can see there have been a lot of rejections at this zone. So next week there's a higher tendency for price to have a bounce down from this level all the way down. But before we can have a bounce down, it will be better if we can have something like a sweep of liquidity before price bounces down. And on the way down, take note, there's a demand right here which could act as a level for price to move up. So if we have this right here, we see have a kind of inverted head and shoulder chart pattern. Alternatively, price could what, just gravitate all the way down to this level to attract some demand right there at this zone, and the price could find a strong demand to bounce off. So if that should occur, that means we have an inverted head and shoulder, which is the inverted left shoulder right here, inverted head, and the inverted right shoulder, and this would be the neckline. So this could contribute to a long-term bullish rally on the euro pair against Britain pound sterling. So this is what I'm seeing on euro pair against the British pound sterling. All right, so this is what we have right here. Now if price should continue all the way up next week, then if we break this level right here, it will be better to look out for a retest before we continue the price to the upside. And then take note of the next strong supply level which acts at this level, which should act as a point of hindrance for buyers. So you have to be very careful if you are trading the euro pair against the Britain pound sterling. But I can see a lot of prospect on this currency pairs next week, either to bounce to the downside or bounces and break this level all the way up. But I can still see arrangement of strong buy sentiment right there, but there's a resistance structure right there. So a sweep of liquidity right there could make price to bounce to the downside. Now the next currency pair on our list is the Great Britain pound sterling paired against the Australian dollar. Now this currency pair had been in a massive sell off right from what, from the 8th of that is from the 7th of April 2025, and the origin of this bullish rally started from the low right there, which was the 1st of July 2024. So we have a multi-year key level structure right there, which is a long-term support or a major support structure right here. Now price is gradually moving to that key level structure, which acts at the price of the 1.89131. So next week, if price should test this level, there are going to be a lot of strong technicalities occurring at this level because it's a major key level structure. Now let's check it out on the weekly chart so we can see the candlestick properly. So next week, it is possible price push to this key level support right here, and there could be a bounce off whereby we have a sweep of liquidity. And then don't forget the massive orders we have right here, which is an FVG. So for those of you working on FVG concept, or those who trade the smart money concept, on the weekly chart we have a lot of imbalances right here, or what we call the FVG. So next week price could bounce into this FVG whereby we have a massive sweep or rejection right here for a bullish long term on this currency pair. So that could be another multi-year bullish aggressive rally. So Great Britain pound sterling Australian dollar is on my watch list next week for a possible buy to the upside. Now let's check out US oil. US oil is another asset we have to focus our attention next week. Now this is the weekly chart. Let's check the day chart. On the day chart, we have a lot of resistance or supply coming in at the price of the $66.57 per barrel. And see right here, there has been a supply right here right from 2nd of September, and on the 26th of September it acted as a supply to the downside, and again on the 29th of January 2026 it was a supply, and then again price tested this level on Friday. That is the week we just exhausted. So price formed a doji candlestick. So a doji right here signifies there is a state of battle, there's a war, there's a tug of war between the buyers and the sellers. So we don't know who will eventually become the champion in this battle. So what we need to do next week is to exercise patience. So there are two things you should expect on these assets. So number one is, if the next candlestick can give us a bearish candlestick whereby clearing the low of the bullish candlestick which formed on Thursday 19th of February, there it means we have an evening star right here, and this could lead to the sell-off from this level all the way more to this next key level structure we act at the price of $60.56. So that is technical possibility right there. And then next week, if price should give us a surprise whereby it clear out this level, then we should expect more bullish rally. That will be to the next supply zone, which acts at the price of the $71.17. So that is what I have on the US oil. So we have another supply zone right here, which could serve as a point of entrance for a buy. So next week, let's just pay attention to this asset. Maybe we are going to have a push to the downside, and then a push to the downside as well. We need to understand that there are a lot of demand right there, which could act as a point of entrance. So which means if price bounces off this level right here, maybe with an evening star, price could form or find demand right there before proceeding up to test this level, or it could make it to go in a sideways market structure. Alternatively, price bounces to this level or break to the upside. So next week, the US oil is a currency pair you should have on your list if you are looking out for trade opportunity. Now it's time we wrap up our analysis with gold. That is the king, right? Now, from the day chart, you can see market is going aggressively bullish. And then congratulations, I congratulate those who are members of our free scalp trading signals community, where we scalp gold and GBP paired against USD. Congratulations, we took a lot of scalping trades on gold last week. It was a profitable, good trading week experience. So now gold is still going up. From the day chart, you can see we are trying to break out of a high level, which acts at the price of 5,118. Now let's move on to the 4-hour chart. On the 4-hour chart, this is what we have on the 4-hour chart. We traded these buys right here. I made a video right here on our Yoruba platform, right? So next week we should expect more buys on gold, right? So we have a key level structure right here. So next week, if price should break this level right here, then we should expect more buys to flow in on gold. And the next possible supply zone acts at the price of the 5,500. Alternatively, price could go all the way high to test our multi-year swing high. That is the peak of gold, which acts at the price of the 5,596. Alternatively, a sweep of this high next week could make price to gravitate all the way down and come back to the potential demand zone we have at this level. So a failure from this level could make the price of gold to depreciate all the way lower to the trend line we have on this chart. So you can see right on the 4-hour chart right here, you can see the multiple tests of trend line right from this level right here, bullish right here, and then bullish. So price of gold could depreciate to this rising trend line, and this could constitute a strong demand up. So we should expect a possible demand at 4,700. That is if the price of gold should depreciate, or if we see an unexpected high volatility in the gold market. So this is what I have for you guys. Whatever I'm going to do, I will always share with students, members in the VIP community and the free scalp gold trading signals community. So check the links in the description of this video, right? So this is what we have for this week. Thank you for watching this weekly forex market analysis, which is for the 23rd to 27th of February 2025 from the beginning to the end. So I have a gift for you. If you have watched this video to this zone, then congratulations. Check the links I left in the description of this video to enroll or to gain access to our free scalp trading signals community, where we scalp gold and keep it prepared against USD. Click that link and follow the instruction. I will see you in the next one. Peace.